Is Ebola, the fear of it, also contaminating investor confidence? What a wild, crazy ride yesterday. Did you notice that? From the opening bell to the closing, at one point the Dow plunged 460 points, eventually ending down 173 points. It's been up and down the past 3 weeks. What's responsible? What should you do with any of your investments? Travis Freeman is president with Four Seasons Financial Education. He's joining us. You don't sell stocks, you don't sell insurance, anything. You advise companies and individuals. And that's one of the biggest fears people have in a business, is what to do with their money, how to invest it. What is causing this, do you think?
You know, it's so much easier to catch the fear of the virus than to catch the virus itself.
Right.
And so many people say, gosh, should I take my 401k and go to safety for a while with all this craziness going on? I really don't think so. If it's long-term money, I think this is just going to be a blip on the radar. Remember the 2003 SARS scare?
Yeah.
In 2009, we had H1N1. I mean, 150,000 people passed from that horrible H1N1 virus. So it was a blip on the radar, and in comparison to what we're dealing with now, I think, again, it's going to be a blip on the radar long term.
Yeah, there are other fears, a worldwide economic slowdown. U.S. retail sales were down last month, 0.3%. The Fed, are they going to raise interest rates still this year, next year? When? That's something people are thinking about. And also, October traditionally, think back to 29. I mean, this is a bad month usually.
It is, and you know what? We've had such a huge long run-up since March 9th of 2009, the bottom of that big recession, till now. The S&P 500 has been up about 150%.
We're due for a correction.
We were due for a correction, and again, a correction's a 10% or more drop. So was this kind of the excuse the markets are looking for? Maybe, but again, unless you have money that's in the stock market you need to put on your house in 2 months, you know, you're probably thinking long-term you're not going to make any emotional decisions. If you make an emotional decision with your money, you are likely to regret it.
Yeah, oftentimes people will say, well, look 10 or even 15 years into the future. Do you think the stock market's going to be down from what it is today? No. So stay in it.
That's right.
And stay in equities, stay in stocks instead of, you know, like going into bonds and things.
Correct, especially if you're growth. And again, even if you are 60 today, retiring at 62, and you might think, I only have 2 years to go. Well, you might live to the age of 90 or 100. That's a very long time horizon. So don't let those retirement dates, for example, scare you. You have a long-term time horizon still.
So the only thing you have to fear is fear itself.
That's exactly right. I mean, our economy has been through this again. I have a lot of confidence in the CDC kind of stepping up and taking control. And we have to remember that the systems we have here in the United States are nowhere near what they have in West Africa. It's just a very different situation.
Yeah, some look at this, downturns or whatnot, and they say, instead of being fearful, get excited.
Right.
Because there are going to be bargains out there.
Yeah, and again, I'm not advocating that everybody do this, but even my wife and I recently put more money in into the markets because we found some bargains out there.
There you go.
Yeah.
Travis, thank you so much for coming in. We appreciate it.
You bet.
And your website again?
Yeah, fsfe.com.
Okay, that's easy enough, and we'll put that on our website at fox2now.com. Randy?
All right, thank you so much.